Bitcoin was at $12,800 or $11,800 in October 2020. The Nasdaq was around 11,000 and gold was far more than it is now. If you fast forward 24 months, Bitcoin has increased by a factor of 2.75, gold has decreased, the Nasdaq has remained flat, and the rest is chaos. The same pattern may be seen if you go back 4 years. You may observe that same pattern if you go back 8 years. So, if you're a trader, you're probably thinking to yourself, oh, they're going to hike interest rates 75 basis points or 50 basis points when they indicated they weren't going to raise them. The market rallied after it was announced that the interest rate would not be raised by 75 basis points. When inflation is more than projected, the market plummets. However, if inflation is more than projected, you should consider purchasing Bitcoin as an inflation hedge. Michael Saylor, an American entrepreneur, executive, and chairman and CEO of Microstrategy, discusses his macro analysis of Bitcoin's current volatility and price action, the differences between a digital security and a digital property market's performance amid high inflationary pressures, and his personal opinions on the recent Luna and Terra collapse in today's video. Make sure to watch all the way to the conclusion of this video where Michael Saylor explains why everyone should purchase the Bitcoin dip. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. This appears to be second first order, second derivative material. We're still in an inflationary situation and they're not compressing as much as they should be. If you adjust the theoretical interest rate to stop 8.5% inflation, actual inflation is 9%, right? So, if this were Paul Volcker, he'd have boosted interest rates to 9% overnight. We boosted interest rates 25 basis points to 2.75% and discussed perhaps raising them another 1 or 2% in a year and a half. It will still be under 8.5% if the interest rate is 2.5%. 8.5% is a hedonically modified figure. I believe I witnessed some calculations. It would have been 15% if they had utilized the 1980 methodology they claimed. It would have cost twice as much. So, if you had a conservative bank, the neutral interest rate in the US dollar would be 16%. We are not there. We're not going to make it. We're not going near that area. Each prescription I've seen had an inflationary component. So I believe that the traders are trading because they're creating a lot of noise. However, you must drop your IQ by 50 points minute by minute, hour by hour, day by day. You can't be too intelligent since trading with traders requires you to dumb yourself down. It's why I don't deal with traders. The profitable is the polar opposite of the logical. To trade with traders, you have to do the polar opposite of the reasonable. So I don't believe that makes sense. A week after one stablecoin fell, sending waves through the market, Michael Saylor is also commenting on the direction of crypto. According to Saylor, digital assets can be divided into 3 groups. The crypto crashes demonstrated that the crypto world is made up of 3 components. One near perfect thing is Bitcoin, which is a digital asset. Things with a few flaws are stablecoins. The world desires digital bucks. Finding them is difficult. They have the appearance of opaque money market funds. Then there's a slew of other potentially hazardous things. Altcoins are unregistered securities, and we observed an altcoin burst this week. The world wants reliable stablecoins. Except for Bitcoin, I believe the most important lesson is that every one of these cryptos are securities. If they are securities, There are management teams in place and policies in place. The question is, what reserve is behind the coin and what policies are backing the coin, correct? As a result, I honestly cannot tell you what UST's reserves were or are. I couldn't determine what policies were in place, can I? Because you won't find 200 pages of SEC papers that explain everything, correct? Tether's reserves are unknown to the rest of the world. You have some kind of idea, but you don't know for sure. What policies are in place? You don't have a clue. You understand a little more now, but you're still not sure what the other stablecoins' reserves are. The aim of regulators like Gary Gensler is that their securities should be fully disclosed. The disclosures necessitate teams of lawyers and accountants which drag down the process. When you're working with that many money, you can't go too fast and break things. You must genuinely reveal everything. People should be aware of their investments. You can view all of our bond terms if you acquire MicroStrategy stock. The specifics of the Silvergate loan, the converts, and the junk bond are all publicly available. You're able to read them. You can examine the company's financial statements. You can learn about the company's management. You are aware of the company's shareholders. An 8K lets you know whenever something material changes. When you're in charge of enormous sums of other people's money, that's how securities should function. I believe the crypto sector is still in its development stage. It will mature, and it will be necessary. We're making the transition from entrepreneurial to institutional enterprises. Institutions, for example, have highly sophisticated mechanisms for delivering transparency. When it comes to crafting sentences, they have lawyers to figure out who does what and when. Did you and how did you punctuate it? Is there any ambiguity? There is a problem if there is any confusion. That's why people get so worked up over these things, right? Even without 1,000 pages of information and sufficient or complete disclosures, people may still be confused, either purposefully or unwittingly. So, if you don't reveal all of those disclosures, I believe you'll be in pandemonium. That, I believe, is a takeaway. It is past time for the sector to mature. In the aftermath of the computational Terra USD depegging from the US dollar and the connected altcoin Terra Luna shattering to cause price losses of over 99%, I believe it's time for people to understand the distinction between a security token and a digital property. The founder of MicroStrategy feels that the long-term consequences will be beneficial to both Bitcoin and the regulatory process. I believe that the entire crypto meltdown will be beneficial to Bitcoin. It will hasten some long overdue regulation of stablecoins, altcoins, and exchanges. It's about breaking the political stalemate. It is informing the general public about the differences between Bitcoin and security tokens. This will make it easier for institutions to enter this market. The Bitcoin bull claims that, in addition to attracting industry capital, ordinary people are lured to crypto as a non-stock market option to investing their money. Every week, I believe we gain new converts. We're destroying the major banks and gaining ground on the trustees. People understand that this is a good idea. The underlying premise is that billions of individuals on the earth should not have to risk their entire life savings in a stock market or a casino to prevent losing everything they own. Then why not invest in Bitcoin, an ultra-tough currency that may be the toughest money mankind has ever devised, and simply wait for a macro perspective on the whole? So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. The only element that ultimately matters at the end of the day is how much Bitcoin you have. you're forever purchasing 121 millionth of all the energy in the network. So if you keep adding to your Bitcoin, you'll always get a bigger proportion of the network endlessly. As people learn more, the network becomes even more powerful. As a result, the macroeconomic strategy is simple. We're a publicly traded firm with a security, so our corporate strategy is also transparent. Someone who purchases our security does so because they aspire to be a part of the Bitcoin community. So, if I had $1 million and wanted to buy Bitcoin, but I couldn't because I couldn't acquire the underlying property for legal reasons, tax reasons, technological reasons, or charter reasons, there are a variety of reasons why they couldn't buy Bitcoin directly. As a result, they must purchase security. So when consumers buy a security, they have the option of buying an ETF through BITO or GBTC, a Bitcoin miner, or MicroStrategy. They all have their own traits, but MicroStrategy appears to be a leveraged spot Bitcoin holder. Instead of billing you a fee, we're paying yield. For example, if you invest $1 billion in a fund that has a 2.5% fee, you will pay $25 million per year. If you invested in a futures product with a 10% or 12% rollover cost, you'll spend $125 million every year to keep the $1 billion invested. We won't charge you anything if you put it in MicroStrategy. We're not moving over futures and are upside leveraged. You're obtaining a return that is tax-free. Last but not the least, if the currency is depreciating, you'll require negative working capital. Negative net working capital is required. So, if you own $1 billion in pesos and they lose half of their value every year, it costs you $500 million to keep $1 billion in peso working capital. When you convert $1 billion into US dollars, you lose $200 million a year in working capital, because the M2 money expansion rate is that. So, if you didn't possess Bitcoin, the optimal thing to accomplish would be to purchase $1 billion in Bitcoin and hold it. But if you couldn't, you'd rebuy your stock with $1 billion. Alternatively, you may borrow $2 or $3 billion. You would not wish to be plus $1 billion. You would desire to owe $2 billion. So you'll need to borrow $2 billion or $3 billion in pesos. Instead of spending $500 million per year because of positive working capital, you would gain $500 million per year if you had negative working capital. As a result of the leverage, a retail trader may be forced to liquidate when the asset moves up or down. That is not a good idea. However, in an inflationary currency environment, debt is almost essential for a firm. So, do you concur with Michael Saylor that all other digital securities, including Terra Luna, will inevitably crumble? Let us know in the comments. And with that, this concludes our video. Acquired a lot of knowledge from this? We recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!